All right, hey, good afternoon, everyone. Markets closed here on Friday. Let's go through these markets in detail, looking at a couple of different time frames and trying to get a good perspective on what the market is doing. Before we jump into the charts, though, let's look at what the Pro Farmer Tour results came back as, and let's look at what that how that will impact our balance sheet. So for corn, the Pro Farmer Tour came out at 172 a bushel an acre. These numbers came out right at the close of the market, so the market is not taking any action on these. Here's the point. The 172 is less important than the fact that it's below 175 and below 177 and certainly below 181. So remember, what the USDA has been doing is they have been dropping yield and they have been dropping demand, right? And they're holding this carry out right about the 2.2 billion number. Well, if we drop the yield down, then our carry out drops to 1.7. If we bring demand somewhat back up to where it could be, then our balance sheet reverts back to relative tightness. And now, in order to get really high corn prices, right, we have to have a stocks to use ratio of, let's call it, under 10. But anything under 10, we should see a significant rally. Now that we're back into the 12s, though, if the market decides to price this in, the downside should be muted. We shouldn't have a whole lot of downward pressure or risk, and we should be seeing higher prices. The bullish story, though, is really on beans, because what the USDA has done, and remember, we talked about this last time, the USDA reduced yield from 52 to 50.9, but in order to keep the carryout at a relatively lofty level of 245, what they had to do was bring demand down, raise imports, and find old stocks. Well, if any of those things is not true, then our stocks to use ratio plummets, because the Pro Farmer Tour came out at 49.7. So there's got to be something that the USDA has to do here, or the balance sheet on beans gets way too tight and the stocks to use comes down to the same levels it was at in 2010 and 11 and 11 and 12 before it ultimately fell to 2% in 13-14. So the market is going to be very, very goosey and edgy about lower soybean yields. You know, we've been seeing lots of pictures of soybean yields dropping significantly off the heat. And I don't think the market has fully reflected that yet, because if it does, and some of the pictures we're seeing and some of the news we're hearing, both in Kansas and Nebraska at least, is that, you know, you're seeing crops go from 40, 50 and better to 20 or worse on dry land. So if that heat problem is widespread, then this number may well indeed be high, and we could be looking lower and a carry out very, very much below 234 million bushels, which is back to levels that we were at when we were at much higher levels in beans. So from a fundamental standpoint, 100% the recipe is here for higher prices both in corn and in beans, and we know we've already been bullish wheat. So the sands seem to be shifting under the feet of traders here, and what was once known is now becoming irrelevant. So here's your daily chart of soybeans. Big nice move above the gap on Sunday night. You know, we gapped up heavy, and then we almost tried to retrace all of it. Now we're back up above these parallel lines, which would be an indication of wave 3 price action, where we should come test 1435. We put out a rec today to go out to May beans and buy 1560 calls. It's relatively cheap, and what that does is buy you a lot of time to get through our harvest, get through an acreage battle early through the winter, get through the South American planting and growing season, get into South American harvest, and get to through our peak export season. So if beans are going to rally, they're going to rally in the front, and they're going to rally hard. And but the May contracts will certainly pick up a lot of that value as well. So as far as this chart goes, we're looking up where our targets. Let's throw some targets out here so you can see them. Got to go off this, you know, initial target 1489, secondary target 1525, and then the real target is up here at 1612 for November beans, and probably higher than that for the others. So I would strongly recommend getting some ownership in place on bushels that are sold if you don't want to miss out on a big move up. And otherwise, we'll look to sell the market depending on how it unfolds, and from what level we don't know. We'll just have to see how we get there. But this was bullish action this week, no question about it. We've got a 1-2, 1-2 count here, and I would expect a big up move coming almost immediately in this market. So we want to be long beans. We want to hold that position and not really overthink it. Okay, corn is a little bit tougher because corn did not accelerate yet, and neither did Kansas City wheat. Corn was unable to close back up above this 489 low point right here, which isn't great. We were really unable to climb our way back into the full body of this big range right here that held us last week. And but on the other hand, we weren't able to get any selling either. So the market's unable to entice sellers to sell it into this 480 level, but it's not enough to get the buyers to push it back up above these two highs right here at 506. But will a yield of 172 be enough to do it? Will a yield of 172 with demand picking up, with soybeans collapsing, or of soybean supply collapsing, will that be enough to push us higher too? Who knows? But I think something's got to give here to push corn out of its range. And so we're going to play it simple. We're bearish below 474, but we're going to bearish with a caveat of we're probably more looking to buy it. So we're going to hold hedges for now, but then on a move and a close above 508, I think that we're going to look for something a little bit more bullish, because I don't think beans can go to $15, $16, $17 and corn stay down here at 5. That just doesn't make any sense long term. I'm not saying it can't happen short term, but it doesn't make sense long term for that to be the case, because corn will just simply give up too many acres in that situation. Please note the divergences down here are very much in play, very much intact, and are not fully satisfied yet. So this could really turn into an explosive move higher if we get just a little bit more of a catalyst. And wheat as well. I was joking with here in the office a little bit ago that wheat is like sitting on a launch pad, and the countdown is happening as we break up above these highs. And as soon as it gets down to 3, they call the launch, because the weather forecast changed just on a dime, and then you got to back it back up. You're still sitting here on the launch pad. There's still steam coming out of everything, but we just can't get ignition yet for whatever reason. Lots of bullish fundamentals in wheat. It's mystifying to understand why wheat is discounting those and ignoring them with as bullish as they are. What are those fundamentals? Well, and if you're corn guys and don't like wheat, I get it, but listen, right? Because corn and wheat are cousins, and where one goes, the other one likely follows. So you've got extreme drought in India, with India looking to buy and import a significant amount of wheat. You have issues in Argentina. You have issues in Australia. You have issues in Russia with the conflict. You have lots of bullish issues happening in the wheat market, and we just aren't really recognizing it yet. I think if we see corn get going, wheat's going to explode, and it's probably going to explode back up into the top of this range relatively quickly. So anytime a market ignores bullish news and doesn't really trade off of it, it's scary and generally not a great thing. But on the other hand, this market's been pretty sleepy for several days here, and we really haven't done a whole lot. And the old saying is never sell a sleeping market, because you tend to get bit when it wakes up. So we're looking up, no question about it. I think that's where we want to be, where we need to stay, and I don't see any reason to change that thought process at all. So we're bullish all three of these grains at the present moment, and recommend reownership be in place. I'm not ready to lift hedges outright yet. So what does that mean? That means that if we've been short futures, we probably have you in just long puts at this point instead of short futures. What that does is keep you protected to the downside, but open up your upside. If we have you in long puts, great. We're happy with that. We're probably just going to sit with it and ride it back up. And that analysis is the same for corn as well. really comfortable with $5 puts. Have no reason to lift them yet because we haven't had the strength to get nervous about those puts yet, or the confidence to take them off and say, hey, we don't want protection on anymore. But on the other hand, I think we're really close, and we're going to see higher prices sooner rather than later, in our opinion. All right, that's what I've got for you so far this week. We'll see how we open Sunday night. I'm looking for strength in beans, especially Sunday night. But you know, after the traders digest it for the weekend, who knows which direction that they'll go. Even if they do sell Sunday night because of cool temperatures, I would expect that buyers will come back in and look at that longer game and keep premium under it, because we're just not going to discount any of these grains with the fundamentals the way that they are. All right. Remember, there's significant risk trading futures and options, and you should only do so in light of your own financial condition. Hope you guys have a terrific weekend. Call us if you have any questions. We're happy to walk through any recommendation we have or where you're at specifically. And otherwise, we'll see how we open Sunday night, and we'll be back with you Monday. Have a great weekend. Bye-bye.